Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get into what's been going on, we've had a lot of volatility again in the markets. Let's recap what happened this week.
Yeah, if we start on the cattle side of the equation this week, live fed cattle prices down nearly $2 for this week. Yet those feeder steer markets were steady to 6 higher this week. On the futures side, the June live cattle futures contract closed up $1, while the May feeder cattle contract was basically unchanged for the week. When we move to the beef side, the choice box beef price was down $1.75 this week. Really saw weakness in chucks and rounds this week, driving that choice box beef price lower. On the pork side of the equation, Barrow and gut prices this week up $2.25, while futures contracts on the hog side, lean hog futures continue to move much higher. The May lean hog futures contract was up nearly $11 this week. The pork cutout value was up 75 cents this week on strength across the board, except for hams. Hams were down this week.
Are we going to attribute a lot of what we're seeing, and especially on the hog side of things, so much to do with the speculation that comes with everything that's been going on with China and increased demand for U.S. pork potentially on the global market?
I think so. I mean, that's much of what's at play. And I again, will keep saying, we're going to get an expansion in pork production this year again. That's large relative to historical standards, 3.5%, 4%, somewhere in there. And so that domestic supply continues to be the thing, I think, that tamps us down. Yet what's going on with African swine fever in China certainly is top of the page. And you and I talked early on about the fact that this was a binary kind of outcome, 0-1. And for much of the early part of 19, I'd say we were at the 0 part of this. Not a lot of impacts, but we got to 1. And when you see another week where we're up, more than $10 on a lot of these futures contracts, it tells you a lot of folks feel like things are getting worse in China. It will help U.S. pork exports, and it should boost our prices. And if things are as bad as some of the extremes that you hear out there today, it will mean much higher prices for U.S. pork. However, if we decide it's not that bad, we could slide back down fairly quickly as well. And so I think all that volatility still sits there.
I think it's interesting to watch how cash markets and how the futures markets have been reacting. Both have taken a fairly positive turn, but I feel like the cash markets taking a more realistic approach and waiting for more tangible evidence to see that this demand picture is shifting.
I think cash markets continue to deal with 4% more pork as we've seen the first quarter of this year, and that keeps them maybe a little more in balance. And you have futures contracts who are just looking at just what could be coming in front of us, and are getting really positive about what it means. And those futures markets could actually be correct moving forward, and cash could find itself trying to catch up. But I think right now we are seeing cash take a little more wait and see attitude given where we're at today.
We talked last week. We're going to talk a lot about demand this week, specifically a lot about domestic demand. Let's start with jobs report as we take a look at that. Another fairly positive report coming out this week.
Yeah, absolutely. We got 196,000 jobs added in March, so pretty close to where we came in pre-report expectations. It's a nice bounce back after what was a little bit of lower outlook. You look at the wage growth up 3.2%, so we're continuing to talk about wages that are moving higher, puts more money in consumers' pockets. I think all of that is really good news. We continue to see unemployment rates sitting at about 3.8%. So all else equal, this report gives us a little more positive news that the economy isn't going to take a left turn anytime soon.
I think to support that as well, we have that restaurant performance index that came out last week that we knew came out. We were going to talk about it today. Fairly positive numbers still as we take a look at those.
Yeah, I think so. When you look at the overall index for February, it came in at a 101, so still growth in terms of what's happening there. The growth has been slowing a little bit as we've moved through the the last 2 or 3 months, but still talking about growth. Current situation index is sitting there, still up 0.3%. Same store sales and customer traffic, both seem to suggest some very modest growth when you take them together. I still look at the expectation side, and you see that expectation index setting at 101.8. Tells me a lot of folks are still expecting some growth in those same kind of categories as we go through the remainder of 2019. So all in all, that restaurant index seems to correspond reasonably well with what we've been seeing in terms of jobs report and overall economic growth in the country.
K-State released its demand index this week. As we take a look at that, some declines domestically. Are we surprised to see maybe it slow down a little bit there?
So I'm not terribly surprised. If you look at we'll start on the beef side, their 2018 beef demand index, it was down 1.86% according to the numbers that they've released. We've come through some really, really stellar demand periods. So taking a little bit of a breather is not necessarily all that bad. And I just remind us there were periods of time where we were talking about 5% annual declines in beef demand, and we strung a lot of those years together at the same time. And so I'm not too disappointed. And if you looked a little bit at their quarterly information, fourth quarter of 2018, demand still looked pretty strong relative to the previous year's same fourth quarter. So all in all, I think more support that, yes, we're seeing a little bit of slowing. It's just hard to repeat the kinds of strong growth that we've had year after year after year. You turn to the pork side, again, an index that's down 1.3% in 2018 relative to 2017. Some strong growth years for pork as well when you look back over the last 4 or 5, but maybe a little more weakness as we've seen now 3 years in a row with down numbers. But all in all, I keep saying, thank goodness we've had as strong of demand growth as these indexes would suggest generally, because we certainly been putting a lot of meat in front of U.S. consumers relative to where we would have been 5 years ago or so.
We know that there's still growth coming in the pork sector. As we take a look at these numbers, does it kind of highlight the importance and the necessity for us to continue to grow demand for our products internationally?
Absolutely, it does. When you think about the growth that we have and what might be a little bit of slowing in terms of domestic demand, we're always going to look for those other markets to help us move more product. And so international demand will continue to be front and center in that discussion as we go through 2019.
China. and we come back to that whole conversation, especially on the pork side of things. And it's so interesting to see how our market is now so dependent on the news of the day in another part of the world.
Yeah, so sometimes I just, we have to keep up some perspective here. So let's say the Chinese pork production was cut by 20%. I'm not sure where the number ends up at the end of the day, but a 20% cut is not quite, but almost half of what we produce in terms of pork in the United States on an annual basis. So there's a reason why markets are so volatile, to this information. Now, having said that, I just want to remind folks 2 things. Number one, this is not a 1-for-1. For every pound not produced in China, they're not going to import a pound in return. I think we're going to see prices moving higher in China and consumption of pork moving lower in China. They're going to look for alternatives. That's where beef, that's where chicken, seafood. I think there's a lot of substitutes that may come into play in China. But number 2, other countries are going to try to import pork into China as well. And I think so far this year, we would see the EU has still captured about 2/3 of any kind of growth in overall Chinese pork imports. So the U.S. can certainly gain, and I expect that to be the case this year. But knowing exactly those numbers, I just remind us there's a lot of less than 1-for-1 linkages that are going to occur as we look forward in China.
Scott, as we wrap things up this week, weather kind of has been the other big topic here in the U.S., specifically about how it's impacting row crops, delayed starts, shortened growing season. more pressure at planting, but it's also impacting what's going on with cattle producers specifically. Are we getting a little nervous with the amount of moisture we've had and how it's going to play out when it comes to feeding cattle?
Yeah, absolutely. So we've seen a lot of mud in a lot of places that I think have affected performance, whether you're talking in the feed yard or talking about spring calving season, where a lot of pastures I think that you'll find that aren't in very good shape as when you have that as much rain as we've had across much of the U.S. It creates pretty tough pasture conditions. We're early in the season. I'm curious what warm up does in terms of getting pastures back in better shape, but we need more hay production this year. We're at some of the lowest hay stocks that we've seen, and rivaling where we were in the 2012 drought. If we don't have a good hay year and those stocks stay really tight, we know hay prices are going to continue to be high. I think a lot of producers are just trying to stretch themselves to the very last few days here with what's probably the worst of their hay supplies. And so I'm looking forward to maybe what'll be a warming weather pattern as we look in the next week. But weather's certainly been front and center again as we've started this year.
For next week, what reports are we keeping an eye on for, and what will we be talking about next Friday?
Yes, we will get USDA releasing their monthly report, the WASDE report, on Tuesday. For me, interestingly enough as well, so Foreign Ag Service of USDA will be releasing what's now twice a year an international livestock circular. Seeing what we might get from USDA in terms of current thoughts on China will be important. As we kind of wrap up next week, we'll get retail prices and a consumer confidence report as well.
All right, Scott, we look forward to seeing you then.
Very good, Megan.
To have our weekly livestock market delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe and submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.